It actually eventually cost me more for a parking space outside the building than it did for the office. Can I go and sell these products? Can I buy them from you and sell them? And they said no, because there's a risk here and we don't want any risk and we don't want any expense. This was no ordinary catalogue. It was bright yellow and the pages were bright pink. We managed to finance the business purely through the credit suppliers extended to us. Well, what actually do you want to do? And I said, I want to float on the stock market. And they said, how much do you think your business is worth? And I gave them a number of millions. And they just looked back and said, yes, we're inclined to agree with you. I made about £500,000 in the space of 10 minutes. We were in meltdown. And the truth is we completely lost control over what was happening.
This is the Leeds Business Podcast, and I'm your host, Phil Fraser. This week's guest is Jonathan Straight, founder and former CEO of recycling solutions company Straight plc. Jonathan tells us how the business came about, the journey to becoming a PLC, the crisis caused by overtrading, and then the eventual sale of the company. And we ask the key question, what do you wear after selling your business? Before we start, I have one simple request. Please hit the follow or subscribe button on the app that you're listening on. That's it. Thank you. Okay, so let's get into what is a really interesting episode. Today's episode of the Leeds Business Podcast, I'm talking to Jonathan Straight, founder and former CEO of Straight plc. Good morning, Jonathan.
Morning. Good to be here.
Fantastic to have you on. Now, we'll jump to the important part of the start of the story, but before that, you worked in selling slimming pills, you worked in a call centre, you worked for a bathroom company, you worked for a menswear company, and then, 87, 88, you started looking into environmental issues. So let's start from there. What happened?
Okay, so it was bedrooms, not bathrooms.
Oh, sorry.
That's a minor point. The showroom was a bit more interesting, I suppose, than it would be were it bathrooms. But anyway, I was between jobs, and all these things I'd done before had taught me a great deal about sales and marketing, what to do, what not to do, the sort of black art of direct marketing, how to get people to respond to stuff. And I knew by that point in my career that I could earn a living, but I was very keen to do something where there was a tangible benefit, be it to society, the environment, a good cause. I just wanted it to benefit something beyond me alone. And I started researching all sorts of stuff, but the environment was a very big thing at that point in time. And I discovered something called recycling. And I also discovered that we weren't doing very much of it. And this for me was a bit of a eureka moment. And I thought if I could perhaps help improve recycling in the UK, not only would I be making a great service to society, but I might also make some money at the same time.
Okay, so I mean, recycling obviously is sort of front of mind with the climate crisis and everything. Just give us a flavour of what it was like back in 87, 88, 89. I mean, it really was sort of almost non-existent, was it not?
There was not a great deal going on. Certainly the suggestion that you would have recyclables collected from your house was non-existent. You could take limited materials to recycling centres, which would be at the local supermarket or maybe the civic amenity site, as it was called in those days. Maybe you could take glass, maybe you could take paper, but that was about it. If you were very, very lucky, you might have a paper recycling scheme in your office, but the rate was at about 4% nationally. Really, there was very, very little going on.
Okay. So you've had this eureka moment. What did you do about it?
Well, I started speaking to everybody I could think to speak of, and I would spend my days either at home on the phone, ringing people who I thought might be able to help or might be interested in what I was trying to do, or in the Leeds Central Library, where you could read very obscure and expensive publications like Plastics and Rubber Week and Materials Recycling Monthly. And of course, all of these over the years have been on Have I Got News for You? But they were really useful and really interesting. And one guy I spoke to at Leeds City Council put me in touch with a little fledgling consultancy called Save, Waste and Prosper, or SWAP. And they eventually agreed I could have a job. There was a slight catch to this job, that there was no salary, but it struck me as a good way to get a foot in the door, a good way to learn an industry I didn't know very much about. And at the back of my mind, my great grandfather, who was an apprentice tailor, unpaid for many years, probably was speaking to me, and it seemed like a good thing to do. Now, these people put me in charge of their financial modelling. So after a couple of weeks, I was indispensable, and they had to start paying me.
Okay, I mean, there's a great lesson for some of our younger listeners. You know, sometimes it pays just to do a bit of free work. It gets you in the door. So
No question.
you're now at Swap as their financial modeler. How did that play out, and what did that look like? What did you get involved in?
So SWAT was an organisation that used to do projects for people or manage things. So we used to look after keeping the supermarket glass recycling sites clean, and we managed a contract where people went round and did that. We managed a paper recycling scheme for Leeds City Council. We managed development projects for ASDA, who at that time were very keen on pushing the boundaries of recycling. And one of the projects I was given to look after was for a plastics company over in Cheshire. They were called Paxton, and they developed something called the twin bin. And the twin bin was a bin which had two slots. It had one for cans and one for litter. Very, very much ahead of its time in the late 80s. And they came to Swap because they really didn't know what to do with it. So we persuaded Leeds City Council to buy, I think, 70 of these bins and site them around Leeds City Centre. And we emptied the bins, not me personally. There was a team of volunteers in hazmat suits. I always had a suit and tie on, so I wouldn't get involved in anything like that. But they used to empty the bins and then sort out and weigh the contents of each side, and would assess how many cans had gone in with the litter and how much litter had gone in with the cans. And we proved that it worked. We in fact published a paper called Fashionable Waste, and I've just found it at the British Library, and I can't wait to to actually get it out and have a read of it, because it's so many years since we published it.
Okay, so where did that? I mean, obviously, working for a company like that, where does that take you on your business journey?
Okay, so at some point in time, the guy who was selling the bin for Paxton left. And they really didn't know what to do, because they developed this and they had a couple of other products in the pipeline. So they came to Swap and said, well, we're in a bind. We haven't got a salesman. And my boss said, well, look, I've got Jonathan here, but I'm only actually now paying him 3 days a week because I can't afford any more. So he's got some capacity. Why don't you speak to him? So I got the train over to Crewe, where I was picked up by a guy called Roger Rennie, who was the sales director, international sales director of Paxton. And he picked me up in, I think, the largest car that Ford made, because Ford was the car that they all had to drive. It was a Galaxy or something like that, and drove me to Nantwich, where their factory was, and took me to a little tea shop in one of these Tudor buildings in Nantwich. And he said, we'd like to offer you the job of environmental products manager for our company. I said, whoa, that's really not what I want to do. But I've got some capacity and you've got a product to sell. And so we hatched a deal whereby he could pay me out of his marketing budget, which suited him. And I was really freelance, independent. And so what I did was I worked a couple of days a week for Swap, and the other 3 days a week I rented my desk and the phone and the fax machine back off them for £10 a day. And that allowed me to begin to develop this project for Paxton, really as a consultant at that stage. After some months, I was offered another product from a Paxton another division of Paxton. So they actually had an injection molding division in Walsall, which had produced something called a curbside recycling box, which was a sort of plastic crate that was used to collect packaging. And it was only really used in Milton Keynes. It had been developed for them, and they'd never managed to sell it to anybody else. So now I had this product in the portfolio, and they wanted me 5 days a week. So I moved to my own little office down the corridor from Swap, more of a broom cupboard. It was 120 square feet. It had just enough room for a desk, and it actually eventually cost me more for a parking space outside the building than it did for the office. But it was a good start. I worked probably for another year and a half on this project for Paxton. Charged them lots of money, but really due to timing, and I think also due to their pricing structures, we didn't really do a great deal of business. The final year I was involved with that, we probably sold £150,000 worth of boxes of twin bins, and this large thing called an oil recovery bank, which was to collect used engine oil, because at that time people used to change their own oil and just tip it down the drain, which was a horrendous thing to do. So we were trying to capture some of this used oil, and successfully so. May 1993, I was invited to Walsall to renegotiate my contract, and I was told that Paxton, from that point on, was going to focus on something called returnable transit packaging, which is the green trays you see in Marks and Spencer's and Asda, which are used to move goods around. Before that, cardboard was used for outers, and this was a very new thing, and they wanted to focus on that, and recycling was binned. No pun intended. They didn't want me anymore, and they didn't need me. So realistically, that's where the story should have ended. But I sensed there was an opportunity here, and obviously put a lot of work into developing this market. Everything I was doing really in terms of sales and marketing was totally independent of Paxton. And it struck me it'd be relatively simple to pick it up as long as there was a way for them to supply me with the products. So I offered to buy the molds, and they said they were not prepared to do that. They didn't sell molds. And I said, well, what would you do with them? And they said, well, we'll just let them go rusty in the yard, and at some point we'll sell them for scrap. Well, this seemed like a tragedy. So I said, well, can I go and sell these products? Can I buy them from you and sell them? And they said, no, because there's a risk here, and we don't want any risk, and we don't want any expense. So I said, fine, all right, let me be your agent. I'll just go and get orders for you. You bill my customers, and if and when they pay you, you pay me a commission. And they said, on the basis it won't cost us a penny, we'll try. And that was the beginning of what ultimately became Straight PLC.
Now, it's interesting you said there, at that point, what do you say, you were selling 150 grand. What was it that you'd seen that made you think this could get bigger and bigger and bigger?
Well, there were a lot of drivers. There was legislation which was coming, which would force the separation of waste, domestic waste and later commercial waste. And I knew there would be a need to somehow collect this material separately and move it around and dispose of it. And I also got the feeling from what was happening elsewhere that there was a growing interest in environmental issues from the public. So people were interested in composting at home. People were interested in saving rainwater. People were generally more interested in recycling, and the recycling rate had gone up, not very much, but it had gone up during that time. I'd also been to an exhibition in Munich, probably a year prior to this, and I'd seen that there was a lot of product coming from plastics manufacturers or existing product that had been adapted. So, for example, a large storage crate which had been adapted to collect car batteries in, or something like that, with a suitable lock and a lid on the top. And I'd spoken to a lot of these companies, and a lot of them were interested to work with Paxton. And obviously, without Paxton, they were still interested to work with me. So, post Paxton, it was relatively simple to assemble a product range, and quite a broad product range, based on being a distributor. I was an agent at this time for Paxton, but I later became a distributor through some sleight of hand, really. But it's relatively simple to be a distributor for all of these companies. And within 6 months of starting on my own as a little sole trader called Jonathan Strait Recycling Systems, I was able to print a catalogue with quite a number of products in it. Now, this was no ordinary catalogue. It was bright yellow, and the pages were bright pink and other bright colours. And on the front cover, there was a caricature of me holding lots of recycling containers in my hands. The theory being that this would get me noticed and would make my image, which was slightly different to anybody else selling recycling bins, memorable for the customer, and this worked a treat.
Okay, just again, let me just dip backwards, and maybe this sounds like a stupid question, but you went from being a rep to a distributor. Just fill in the fine lines between your definitions there and how that affected the business.
So initially for Paxton, I was an agent and I worked on a fixed commission. I think it was 10%. So I could only make 10% on whatever I sold. But they had set me up with an account in order to buy samples. And I think I'd taken a relatively small order. It was probably for a couple of hundred curbside boxes, which would have been, £400 or £500. And I just thought, well, let's see what happens if I order it through my account, but I put the customer's delivery address down as the address for delivery. Will they do it? And they did. And of course, then I could charge whatever I wanted for the product. And over the next 3 or 4 years, I pumped hundreds and hundreds of thousands of pounds through that sample account. And they never challenged it. They never said I'd hit my credit limit. Of course, I always paid them on time. The great thing about supplying local authorities is they pay you 30 days net. And my terms with Paxton were 60 days. So it was cash generative from the off. It didn't need any external finance. And that's a model that we followed probably for, I don't know, 16 or 17 years. We managed to finance the business purely through the credit suppliers extended to us. It's only when we started making our own stuff that changed.
Right. There's a really great business lesson there. Very, very simple business lesson is sorry, let's get this right the way around. You give a shorter credit time to your clients than you do from your suppliers.
Yeah, you buy long and sell short, I suppose. Is that right? Is that the way?
That's probably the right way around. Yeah. Somebody will correct us if that's wrong. Okay, so at this point, I think we talked about this previously. You then expanded from just selling Paxton's products to other people's. How did you go about doing that?
So I built various contacts with different companies. Paxton itself had a relationship with an American company called Rarig Pacific, who were one of the biggest recycling container suppliers in America, but were also one of the biggest materials handling container companies. So they used to work with people like Coca-Cola, with various different containers for shipping drinks around in bulk. And Paxton had forged an alliance with them. I later learned that this was really to keep them out of the market, but of course at that time they weren't aware of that. And they were quite supportive of me taking over these recycling containers because Paxton were not interested in them at all. So that sort of helped build the range of curbside boxes. These were quite expensive products. Paxton had also bought a load of samples at great expense, which I now had access to, so I could obviously send out samples. There was another Dutch company called Milko, which was a subsidiary of a big garden furniture firm called Hartman, quite a well-known firm. And they had approached me as Paxton to do a deal. they came to the UK to sign the deal and learned it wasn't Paxton, it was me, but they had to go back with a deal. And so that brought me some wheeled bins, although initially priced so high they were not saleable, but also a compost bin and one or two other interesting containers. There were other firms I'd made contact with, like George Utz, who were a German firm, and they made these car battery recycling containers I mentioned earlier, which they were quite happy for me to buy and sell from them. And they actually had a depot in Derbyshire, which made life very simple because there was stock I could call off in the UK. And similarly, another Dutch company called Kurtek, who made kegs, which were UN approved for carrying hazardous wastes. And again, they had an operation in the UK and they were very keen to work with me. So it was not too difficult to assemble the range. Obviously, it required the knowledge of what would fit and what would sell and what the market was interested in. But that early catalogue really was a showcase, I suppose, of what would come, because it identified all the waste streams that people were interested in dealing with, and provided a solution for each of them.
Okay. So in effect, you'd almost become the sort of like the UK entry point to anybody who wants to get involved in the recycling market.
Well, that was what I set my stall out to be, a specialist supplier of containers for source separated waste. Now, there were other people in the market. There were big people like Linpack and Perstorp, multinational global entities who'd sort of seen an opportunity, and some of them had laid down molds for products, or some of them had adapted other products they had already. But it seems the agility I had and the ability to be responsive, and I suppose also being the underdog, because being the underdog is quite attractive to the kind of person who is buying this product, the kind of person who's working for a UK local authority would tend to view an underdog favourably. And that, I suppose, at some point started to work against us the bigger we got. But, for then it was great.
That's a really, really interesting point, that the mindset of somebody in a local authority who's doing recycling, you're right, would favour the underdog rather than this big corporate monster or whatever it was.
Yeah.
Okay, so
we weren't the only underdog, though. I mean, that was just to complicate things. There were other underdogs, but we were the underdog of underdogs.
The most underdog out there.
The most underdog. Yes.
Okay.
Yes.
Now, 2003, big change in being an underdog. Tell us what that was.
So probably best to backpedal a couple of years.
Sorry.
And the business is turning over a couple of £1 million. It's doing very nicely. We've moved to a new office at the bottom of Eastgate. I'd actually bought the space, so I could charge whatever rent I wanted, and I took the view to charge a low rent to the business, so I didn't pressure it unduly. I'd taken on various staff. I think there were probably 5 or 6 of us by this point. We're doing really nicely, but everything I was selling belonged to somebody else. And some of these products were getting a bit old and tired. And these suppliers didn't seem hugely interested in general in investing in them. There was one supplier who did invest and helped us develop new product and finance those products, but the majority of them were not really interested in this. And then Paxton, who had become my biggest supplier, or probably my biggest partner, because I was now renting their molds and having product made by third parties because I was selling too much for their factories to produce. Paxton was acquired by Linpack, who were one of my key competitors, and I could see that there was a horizon where they wouldn't be supplying me anymore. I didn't think anything would change in the short term because the numbers were too big, but I felt, as soon as the dust settled and they realized what was happening, this will be coming to an end. So I needed to take control, and I needed my own product range, and that needed some money. Now, we had money, but I realized that probably I should keep that money for working capital and for a rainy day. And probably we should try and raise some more money to finance a suite of products. And so what do you do when you need some advice? You call in your friendly neighbourhood accountant, Colin Glass, who I know was a recent guest of yours. And Colin told me what options were open to me. You know, he said you could borrow money from a bank. And I said I really didn't fancy that because their terms might be onerous, and I think, we didn't want them round our neck, really. And he said we could go to a venture capital fund, and I felt that they would interfere too much. And at some point in this conversation, he said, well, what actually do you want to do? And I said, I want to float on the stock market, because I'd read a lot about businesses that had floated. And I'd learned, I used to religiously read the rich list in the Sunday Times. And it struck me there were two ways to make money. Well, three ways. One was to inherit it. One was to actually make it. Or the other was to have a listed company where there was no argument in your net worth, because there was the price of your company for everybody to see. So I thought this was a great idea. So Colin told me every reason why I couldn't do it and I shouldn't do it. And it seemed I had an answer for everything. And he rather reluctantly agreed to take me to London to meet some people, which he did. We met brokers for an exchange called Offex, which seemed to me to be completely Mickey Mouse. They wanted £140,000 to list us. That was just their fee. And of course, there'd be legal and accounting fees as well. And the shares were not particularly liquid or tradable. So I couldn't see the point. They said it was a stepping stone to bigger things, but why not just do bigger things? And we'd had a conversation with a company called game.com, which by that point had become a cash shell. So we could have reversed our business in, and that was a simple and less expensive way of listing. I liked that. They had two directors who wanted a job and wanted a hefty salary. And that for me was a millstone we could do without. But I really was interested in the idea of listing, because I thought it would put clear blue water between us and the rest of the people in the market. It would prove to our customers that we were a correctly managed company. And it would give us the ability to incentivize our staff through share options, but also to acquire other businesses through raising more money if opportunities came about. So I was very keen to do it. And I was introduced to a guy who you might call a city fixer. He was a guy called Jeremy Porter. He'd had a listed business. He'd made a lot of money. He'd gone spectacularly bust. And he sort of made his living by introducing people and taking a commission as a chunk of shares. So Colin and I met him in the McDonald's Liverpool Street station. Just for full information, I did not consume anything at the McDonald's other than a cup of tea or coffee. But we had a chat with him, and he said, look, he said, I don't think you want to reverse into anybody. I think you can actually list this as it is. I'm going to introduce you to a couple of people. Give me a date and come back. I went back. I was introduced to two brokers. One was called Seymour Pierce, now the late Seymour Pierce, and one was called Durlacher, which is now part of Pamuel Gordon. And Durlacher loved the story and said, yes, I think we can do this. Go back, find lawyers, find accountants, find a couple of non-executive directors, and come back when you've done all that, and we'll do the rest. And it'll cost about $250,000, but don't worry, because we'll take all that out the money we're going to raise for you. So here we were on the brink of being listed on the stock market. The dream come true. And there was this moment in that first meeting when they said, how much do you think your business is worth? And I gave them a number of millions. And they just looked back and said, yes, we're inclined to agree with you. And Is this real? Is this really happening? Do these people really believe I've created this multi-million pound entity, which, is at the sort of worst end of Leeds city centre and employs 5 people? But yes, they did. And several months later, after having put a prospectus together and done a roadshow of investors, we actually were successful in listing on AIM and raising the princely sum of £1.5 million, of which £250,000 went straight away in in brokers' fees. And it was one fund that made it happen. We had one investor, bizarrely called ISIS, who took 10% of the company, and they were the ones who got it over the line. So were it not for ISIS, it wouldn't have happened.
Fantastic. And for clarification, this is not ISIS that we all know. It's a different ISIS.
No, it was a fund, and right. it eventually changed its name. No surprise.
Yeah, fine. Okay, now that's a great point. We're halfway through the story here. To tell our listeners and viewers about the Leeds Business Podcast Fair Deal. The Leeds Business Podcast Fair Deal has 2 sides to it. My side of it is every week I bring you brilliant, inspirational, motivational, and fascinating guests for free, like Jonathan. Your side of the deal has 2 parts. Part number 1, recommend this podcast to one other person that you feel will get a benefit from it. Part number 2, on whichever app you're watching or listening to this on or watching it on, give us a thumbs up and a review. That's the Leeds Business Podcast Fair Deal. Jonathan, fair deal?
It sounds a fair deal to me.
There you go.
I've subscribed. I tell everybody about it.
There you go. Thank you, Jonathan. That's very kind of you. So we're now a PLC. So how does business change and how does life change? I mean, obviously, once people have given you all this money, you've got to start, delivering on this valuation you've given them.
Well, you're right. And I remember the Friday afternoon when I was sat with my newly appointed finance director, who was actually an emigre from Paxton because he didn't like what was happening there. He came and joined me. And we were sat watching the screen, and we watched the £1.25 million drop in the bank. And I said, Jim, that was the easy bit. Now, as you just said, we've got to now deliver on everything we promised to do. So things did change. Certain things changed for the better. So I now had these non-executive directors, and I had a chairman, a guy called James Newman from Sheffield, who I think I was his first board to chair. He's since chaired many boards and done many other things. And for me, this was quite interesting because it had been a lonely place. I think this is one of your themes, isn't it? Being a leader, being a lonely place. And now I had people who were interested in what I was doing and were there to help me and were a sounding board. So that was great. We also had a cycle of monthly board meetings, which is something we'd never done before. And that meant there was a date everybody had to work towards with getting their figures ready and their reports ready in order to share what the business had achieved. And the other thing is we had to tell the market every 6 months what we were doing. And there were these shares and they went up and down in price. For me, obviously, I had a lot of shares, but I wasn't allowed to sell any. I was locked in. So the price to me at that point was somewhat academic, although it was nice to see it going up, which it did. Now, I was also given something by the stock exchange, and this was a login for something called RNS. And RNS is where people post stories, press releases on the exchange for investors to see. And I think probably we're about 5 or 6 weeks post the float. And we'd taken an order from Northampton City Council for about £1 million worth of wheelie bins. So this was quite a nice story. So I thought, I'll write up a quick release and I'll post it on the RNS. Half an hour later, the broker rang. He said, your share price has just gone up by 15% and the exchange want to know what's happening. I said, oh, well, I've just put this story out. He said, you what? He said, you can't do that. You mustn't do that. He said, don't ever do that again. But I'd made about £500,000 in the space of 10 minutes. So it seemed to me like a great idea. But obviously not something you were supposed to do. But there was an early lesson in market sensitivity and the fact that you really couldn't tell anybody anything that might move the share price. It all had to be done in a structured, ordered manner through the brokers. Now, sometimes the price did start to move before the stories came out, and you can draw your own conclusions as to why that might have happened. But we behaved ourselves after that. We did everything by the book. Obviously, being a PLC brings certain benefits. One of them is that the business press is very interested in you. So if you put out a story, they'll print it. And I think there was probably not a week we were not mentioned in the Yorkshire Post business section. Got quite embarrassing when they'd used the same photograph of me about 30 times. So we sent them some more, but they still used the original photograph. So you get a lot of press coverage. You've got some clout. People tend to listen to you, but also you've got ammunition, you've got capital, and you've got the ability to raise more capital. And that, as the story evolves, became much more important as we started to grow, not only organically, but also by acquisition.
Okay, acquisition. Let's talk about that. Who did you acquire and why?
So we bought a business. In fact, I bought a business before we floated. There was a company that made a lot of noise selling compost bins in car parks on a Sunday afternoon. And they'd taken a lot of money, and they also had some connection with a Canadian supplier of a very fancy compost bin called the Earth Machine, which we quite liked. Once all the fuss about these one-day compost bin sales had fallen away, they didn't have much of a business left, but they had some useful molds, and they had some assets. They had some nice brand names. So I acquired them for, I think I paid £70,000 for that business, of which I only had to pay half up front. And so another early lesson that you could actually, when you buy a business, often the brands and the brand names and the value in those are not considered by the people selling the business. So we acquired a trademark compost machine, which was the most fantastic name for a compost bin, which we then used for years and years afterwards. I basically got that for free. But our biggest competitor was a company called Blackwall. And Blackwall were established, as the name suggests, near the Blackwall Tunnel. And they moved to Leeds. They moved to Leeds because that was near their trade moulding partners. They had a model like we had, outsourced production. And they could get good staff, they reckoned, here. So this is where they relocated to. I got quite friendly with one of the two owners. We used to go out for dinner once in a while. I used to buy him very expensive bottles of wine, which he would drink, and then he'd start talking. And then I'd run home and scribble down all the notes. So good idea to stay close to your competitors. And at some point, we held an exhibition in a marquee outside a hotel in Huddersfield. And they were next to me. And if you walked back from these two stands, you could sort of see that maybe at some point it could become one business. And I think they saw it too. And they tried a couple of times to do a deal with me, but it was never really in my interest. But eventually, they become a bit of a nuisance to us. So we were making headway in compost bins, which was their core market. And they were making headway in curbside boxes, which was our core market. And we were fighting tooth and nail. We weren't really helping each other at all. But Colin Glass knew their accountant. And I just kept saying, Colin, every board meeting, Colin, go and see this fellow and just see what they want. You know, whatever they want, we just need to get hold of that business. And at one point he came to a board meeting and said, you never guess what's happened. He said, they're going to put themselves up for sale. I said, no, they mustn't put themselves up for sale. We want to buy them. But they did put themselves up for sale. And so we quickly formed a war cabinet, and I had a sort of bunker in my office down in the basement. We all convened there. We got the brokers on the phone. We found out how much money we could raise, and we put together an offer very much predicated on their profitability, because we were aware they were dressing this up for sale. But we were appointed status of preferred bidder. We went back to the market. We raised another 5 million. We were actually horrendously oversubscribed. And I think this is so funny that there were people, and you probably know some of these people who rang me up virtually in tears wanting to get their hands on our shares. And then at some point later in the story, they wouldn't have our shares given, and they wanted to get rid of them. It was quite fascinating. When you say, do you remember that day when you rang me up crying because you couldn't get the shares you wanted? Just sit tight, it's all going to come good. So we raised the 5 million. We could have raised 8 million easily, but you can't do that, sadly. And at the beginning of 2005, we became owners of Blackwall, and that gave us an incredible dominant position. So we had half the water companies running water butt offers. They had the other half. Now we had every water company in the country. We had half the local authorities doing compost bin programs. They had the other half. We now had the entire market to ourselves. We had the lion's share of compost bins the government was selling through its RAP program. And we were also now doing the logistics and the call center work. We had too many products, so we rationalized the product range a bit. We kept most of the staff on. We now had 2 buildings. We had a warehouse and call center, 55-seat call center it probably wasn't that many at that point. It's probably about 40, but we increased it in Seacroft, or just off the Cole Road. And we had our city centre office, which was finance, sales, marketing. And for a time that worked really nicely, sort of having different activities in different places. And I would drive between the two. Along the route, we laid 10,000 quid's worth of fibre to connect our servers together. And yeah, we suddenly were turning over 25 million. We were making money like it was going out of fashion. We deliberately decided not to take advantage of our customers, which we could have done, because we felt we wanted to keep them as our friends and on side. And yeah, it was all going swimmingly.
Okay, so you've got, in effect, the whole of the market. You've got 25 million coming in. You've got money everywhere. Jonathan, what could possibly go wrong?
Well, I'd just gone on holiday. Always a mistake, I think. And my logistics manager rang me. Now, at this point, a lot of people used to pay for these compost bins and water butts by cheque. And we had a team of women in a room in the Cole Road office, whose job literally was to count and bundle cheques into hundreds and put them in the bank. And I just landed on holiday. I got this phone call, and he said, I just wanted to let you know that the banking office have got a bit of a backlog. I said, what do you mean? He said, well, there's thousands and thousands of cheques that have arrived, and they're about a week behind. Okay. So there's going to be a knock-on effect now that if we can't get those through quickly, the delivery of the goods is also going to be affected. And also it sounds like there's going to be demand for goods. So what had happened was there was a drought, and there was a hosepipe ban. But you were still allowed to use a water butt. And in fact, I think technically you could fill a water butt with a hose. So everybody wanted a water butt. And this was at the same time as the government had just offered compost bins for £5, and everybody wanted a compost bin as well. And we were the call centre and the logistics manager for both of these projects. So we were in meltdown. And the truth is we completely lost control over what was happening, because the systems we developed assumed we had infinite stock. And that meant, you've got 25,000 water butts in a field in Blackburn. That's infinite, but it's not infinite if you sell more than 25,000. And also the methodology we used for delivery, which was printing lists and posting them out to drivers, didn't work because there were too many deliveries coming in. And so suddenly a business which I considered infinite had boundaries, and we had to sort of learn to operate within those boundaries, and it was a rather expensive lesson. We only lost one water company client, I'm pleased to say. We kept all the rest, and we actually got that client back later on. But it was a tough lesson, because people were ringing and ringing and ringing and emailing and writing and ringing their council or their water company, who were in turn ringing us. So we used to expedite deliveries from the warehouse, but even that wasn't so simple, because some of the parcel carriers were sort of losing these rather large objects we were posting with them. So, you know, you could send something out and it still wouldn't, by a courier, and it still wouldn't arrive. So yeah, it was an interesting time and an interesting lesson in holding a team together when really everything appears to be going wrong. But we weathered it, and it didn't do the share price a great deal of good, but we came out of it much stronger as a team and stronger as a business.
Right. So just a warning for listeners: don't overtrade. Is the main learning, really, isn't it? Or at least have systems in place that can manage it.
Yeah, it wasn't a financial overtrade. We certainly could manage that. It was that the systems were not able to cope with a volume which, to be honest, we could never have anticipated. And people were saying, well, why don't you stop taking orders? Well, no, we're not going to do that. That's the last thing we want to do. We need to keep taking the orders, but we also need to fulfill them. So when people place an order, we now said it's going to take 8 weeks instead of 4 weeks. And gradually it was managed. And then we put in some new systems whereby the delivery couriers would download their orders directly from our servers and mark them off as delivered online. So this was a whole new innovation, which actually I had scoped and offered as the solution, but it took a couple of years to implement that. And in the meantime, we had to manage with a paper-based system.
Yeah, and I assume it's just the normal growing pains of the step changes that businesses have to go through as they get bigger and bigger and bigger. Now, before we get on to perhaps the end of the story, the sale, each week we ask our guests to give us a how-to, and you have referenced this, and I forgot to jump in at the time when you said it. So, Jonathan, tell us what your how-to is and what you're going to teach us how to do.
Well, I'm going to tell you how to register a trademark, because I've always been very sort of keen on doing this, and I've done it for subsequent businesses. I've also done it for a number of clients, but I'm amazed how many people don't protect their IP. And I'm also amazed how people think it costs a fortune to do. And in fact, it does cost a fortune to do if you use an agent or a legal firm, but you don't need to do that at all. You can do it yourself, and it's very, very simple. So the first thing you do is you go to gov.uk and you search for trademarks. The second thing you do is you search their trademark database and have a look if the trademark you want to register is already registered. If it isn't, great. If it is, well, look what classes it's registered in, because it might be that yours is a different class and you can still register it for your own use. So you need to pick the class or classes you want to register in, and then you fill in a simple online form and pay £170. They will give you lots of help, but there's also a great facility at the Leeds Central Library called the BIPC, which offers a huge amount of business advice, but also advice on intellectual property, and they're very hot on intellectual property, and they will help you if you need help. Now, hopefully, it all goes through. You get your trademark, and then you can put the letter R in the little circle next to your brand. But if it's challenged, again, it should be relatively simple to deal with the challenge. Or you can buy in some legal advice for an hour or two, which again will cost you far less than having somebody manage the whole process. And indeed, I did that with one trademark where I'd sort of got as far as my own knowledge would take me, and I think I paid £300 or £400 for a lawyer to manage a bit of correspondence, and we actually won that case convincingly against a Turkish dessert company who were totally unreasonably challenging a brand I wanted to register. So that's how you register a trademark. It's a simple, cheap, and easy thing to do, and it protects your IP. And you can register words, or you can register images, or you can register both.
Jonathan, fantastic advice, and it is fairly straightforward. We did it with our business, and actually we had somebody who challenged, and we ended up with a very simple way of getting out of it. We just had to put a caveat at the bottom of our website. This does not relate to our company. Was called Which Bingo. Unsurprisingly, the Consumer Association raised the issue of which, but we just ended up with a line at the bottom of the website, and that was the conclusion. So yeah, great advice, Jonathan.
One of the brands I registered for a client is Morris and Son, and we got a challenge from Morrison's, the supermarket. So I think the owner of Morris and Son put something on LinkedIn about how they were behaving in a irresponsible manner, and very quickly they disappeared. So I think there's a lot of bluster with these things, and I think you just tell people you're not playing, and most times they back off.
Yeah, that's right. Okay, so let's fast forward to 2013, and we've talked about floating the business. We've talked about acquiring other businesses. The other side of the coin, let's talk about selling the business. How did that come about, and talk us through it?
So the plan was at some point to sell. The plan was that I would transition from chief executive to chairman, bring someone else in to do the day-to-day work, sort of ease myself out. But we'd had a lot of issues to deal with, and I wasn't so much enjoying it as I had in the earlier days. I suppose, I'd spent 10 years motivated by fear of failure, and 10 years motivated by responsibility to my team to be able to feed themselves and their families. I wasn't quite ready to sell because the value I was looking for hadn't quite been realized by 2013. But we got a knock on the door from somebody who said they were interested to buy us. So the first thing you say when someone says they want to buy you is, "Well, I'm terribly sorry, but we're not for sale." But don't run off. Tell me a bit more. And you do realise we're a public company, and you can't just walk around saying you want to buy a public company. You've got to be serious. And so this sort of game of cat and mouse eventually got this company hooked, and they were hooked before they'd agreed a final price. We had that negotiation in London, and we had it at our broker's office, and that was genius because it was my home territory, but for them they were like fish out of water. A whole team that had come over from Dublin, suddenly in a fancy office in the city of London, and they said, "Well, look, what is the bottom line? What do you want?" And I told them, and they all went out the room, and they came back in and said, "Fine, we might not pay it all as consideration. We might want to give you a bit as consultancy. We might want to do some elements in a different way, but you will get the sum that you've asked for." So it's fine. That's it. Well, it wasn't it. It took them a year. They did this in the most stupid and drawn out manner. And you can imagine running a business for a year when you know it's going, but you don't know exactly when it's going. And things happened over that year. We had a big customer go bust, owing us a huge amount of money. And my FD says, "Should we tell them? Should we tell them?" And I said, "Well, they haven't asked." I think the golden rule in this game is if they don't ask, you don't tell them. There's a data room. There are questions coming in every day, and we're answering those questions honestly and fully. But if they don't ask a question, there's no way we're providing more than we've been asked for. We weathered that storm. We got through it. August 2014, finally the deal was done. I was actually going on holiday that day. This wasn't planned. It was supposed to have happened a few days before. But literally, I went in the office in the morning. By the afternoon, I was on a plane. I had no job. I also had no money because they hadn't paid me at that point. The most strange feeling, sort of jetting off to Portugal with no job and no money. And I was saying, well, what do I say to people when they ask, "What do you do?" That was one of my big worries. And the other worry is, what do you wear? I'd worn a suit, shirt and tie every weekday for 25 years. I really didn't know how to present myself. But all these things worked out, and I dealt with them. But yeah, that was the end. That was I left, and I never went back.
I mean, I've been through the same process as you. I've sold a business. We did it the other way around. We came back off holiday, went straight to the lawyer's office, signed a bit of paper, then went to the office and told the team. So I did it slightly differently to you. But and I've struggled with this. How did it feel? From an emotional point of view, how does it feel once you've exited your business, your baby?
There wasn't emotion there, and everybody says, "Oh, you might feel that," but I think the last year or two of being there had been quite tough, and it was necessary for me to move on and do something else. And I remember going to the NEC, to the waste exhibition, the first year they'd taken over, and just seeing all the horrendous errors they'd made with the placement of brands and the placement of logos. That, you're just a bunch of idiots. You've no idea what you're doing, and I'm really not going to let it upset me, because there's no point. But yeah, and they're still using that brand, and they're still using it wrong. They now stuck it next to another brand, so there's two brands that have no connection or relationship with each other side by side. No, the emotion wasn't there. I think a few interesting things happen. One is how the advisory world, who are so keen to court you and wine you and dine you, just drop you like a stone and don't want anything to do with you. All these lawyers, accountants, and so on, who are your best friend, suddenly don't want to know you at all, even though you're doing other stuff. They're just not interested. I suppose, some people might view you in a different light once you haven't got the job title. And I actually advise people now, if they're talking about, well, what do I do post-sale? I'm thinking of doing some non-exec work. I would say, well, actually, you should get those jobs before you leave, because actually, while you've got a position, it's probably easier to sort of gain those non-exec jobs as to opposed to when you're actually the other side of having your full-time job and your title and everything that goes with it.
I was going to say that is great advice, because your kudos is as a the owner, the chairman, the founder of a PLC. Would you like me to be your non-exec? Has a different ring to it to, actually, I've got nothing to do. I've got loads of spare time. Please, can I be your non-exec director?
Yeah,
it's a slightly different sell.
And I was, I was.
Yeah, I was the founder of a business.
And I think it's the same thing. I think it's the same thing with gongs, and somebody should have put me forward for an OBE while I was doing all that, because it's much tougher to sort of get those kind of things once that main job is gone.
And before we go, I ask every guest to give a shout out to another Leeds business. So, Jonathan, who are you going to give a shout out to?
So I'm giving a shout out to the Street Lane Bakery, which, as it says on the tin, is a bakery and is on Street Lane. And I'm giving them a shout out because they've made all their bagels vegan recently, which means I can eat them, and they're very delicious. So go to the Street Lane Bakery and buy some of their lovely bagels and all the other stuff they sell, which is fabulous.
Brilliant. And there'll be a link to Street Lane Bakery in the show notes. Jonathan, it's been absolutely fantastic talking to you. Thanks for coming on.
Thanks so much for having me. I've really enjoyed it. Thank you.
Thanks for listening to this episode. I hope you found it interesting, inspiring, and of use. To make sure you don't miss out on any future episodes, please subscribe to the show. Go on, do it now. Do it now before you go off and do something else. Thank you. Much appreciated. Oh, and don't forget our fair deal. See you next week.